Soren, you're here to reveal a new short position. What is it?
Thanks, Erik. Yeah, we're short Pinduoduo, PDD, which purports to be China's third largest e-commerce company behind Baba and JD.com, in which the Wall Street hype machine has anointed the world's fastest growing internet company.
The Wall Street hype machine. We'll get to Wall Street in a minute, but let's talk about Pinduoduo, or as you say, more commonly known as PDD. This is the third largest Chinese e-commerce company after Alibaba at JD.com. It's got a $19 billion market cap. I've read your report. You're making it publicly available. You've identified a whole host of issues with this company's reported financials. Give us your thesis, Soren.
Look, we're short for four reasons. One, we think local filings show that their revenues are overstated and that their net losses are greater than they reveal. Two, we actually think also that their headcount is substantially larger than they tell U.S. investors. Three, we think there's evidence that there's an undisclosed related party, which is secretly bearing some of the staffing costs. And finally, we think their headline GMV is wildly exaggerated.
I want to get into some of those issues in more detail, but let's cut to the chase. The stock is trading at $17 and change. It's down from a high of almost $30 in September. What do you think it's worth?
So our valuation, we do it on either an adjusted price to sales or an adjusted price to GMV. And we still think we're being generous with the multiples that we give them. We assign on the price to adjusted sales the same multiple as Baba. I think investors here are confusing popularity with profitability. And while there is value to the business, we think it's trading at a rich valuation, and they do make fundamental misrepresentations about the cost structure of their business, its overall performance, and the transaction volumes on their e-commerce platform.
So that takes us to what number?
Between $7 and $8, depending on how you value it.
To between $7 and $8 as opposed to what we just saw moments ago, which is on the high end of a 16 handle, close to 17 bucks. Soren, I want to remind everybody that you've made a name for yourself as a short seller on positions, a couple of positions, GDS Holdings and Samsung. It's important that people understand how you draw the conclusions that you've made in this report. Unless I'm missing something, it's based on publicly available information, correct? You don't have a mole inside the company or otherwise privileged access to information?
No. I mean, look, it's based on months of primary due diligence, months of primary work. I mean, one of the reasons we release an investment report, and it's over 40 pages, is any investor can look at the data that we've assembled, look at the evidence that we're reviewing, look at the sources. Often they're actually just online sources, and they can just draw their own conclusions, and that's really what makes a market.
Again, in the report, a number of, one of the main things that you've done is point to discrepancies between what PDD has put in its SEC filings and what it has put in its Chinese regulatory disclosures. And that's something in your analysis of a smoking gun. I have to ask, is it possible that there's a legitimate explanation to do with the differences in, say, accounting standards between what PDD is representing to the SEC and maybe what it's representing to the Chinese that might explain the discrepancy?
No, we don't think so. I mean, revenue recognition rules are pretty similar between U.S. GAAP and Chinese GAAP. I mean, look, we've been analyzing U.S.-listed Chinese companies for almost a decade, and over that time, we've been analyzing SISC files. Generally, what we find when there's a significant discrepancy, like in the case of PDD, the most likely explanation, the explanation that we find credible, is that management has overstated its performance, the financial performance of its business to U.S. investors to make it look more attractive. And
similarly, is there something other than a sinister, if you will, explanation for the hiring and the recruiting that it's doing with this previously undisclosed related party that you've identified in your report?
Well, I think that if any investor can click on these job postings, and what it is that there's undisclosed related parties that are hiring for positions at PDD, but it's not PDD that's hiring, it's actually the related party. Now, our conclusion is that the company drastically underreports its headcount, and that's based on the company's very own website, and that having undisclosed related parties bear some of the staffing costs makes its cost structure look a lot less onerous than it really is in practice, and that gets to the fundamental bull case of why people are invested in this business.
So overstating revenue, inflating gross merchandise value, understating headcount and thus staffing costs, underreporting net losses. Is it fair to say, and I'm not trying to put words in your mouth, but I want to know what this all amounts to. Is this company cooking its books?
Look, we don't want to get Hollywood about the pronouncements, and what we encourage everyone to do is just simply look at the evidence that we've assembled, analyze it for themselves, and reach their own conclusions. We think that once investors really start unpacking this business, I mean, this business is faddish, and fads are popular, but popularity doesn't translate to profits, and that doesn't also mean they're not making fundamental misrepresentations about their business.
Well, we are, as you would expect us to, Soren, attempting to contact the company and seek comment. I would like to leave it with this. What is the motive here? What would drive a company that appears to be somewhat successful to so wildly overstate, as you allege, its financials?
Well, I think it comes down to the fundamentals of their business. I think that this company is feeding off the scraps of Chinese retail e-commerce market. It sells the cheapest goods at the bargain basement prices to China's poorest people in China's poorest cities, and it loses money doing that. And we think the motivation for some of these things is that simply it's made its stock price look substantially more valuable than it actually is to U.S. investors.